It is next to impossible to go to an Inman conference or to a mortgage bankers conference and not have the subject of dual licensing come up. What's dual licensing? Should it be allowed? Is it allowed? Is it a good idea? Or is it a big waste of time? Check it out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Yo, what's poppin'?
JC, I'm excited.
I know.
I am so excited. We just wrapped up phase 1 of 3 for the TLOP business planning. I'm not talking about the business planning we did for the branch managers and the loan officers throughout the country. We did that. I do that every single year. I think it's a pretty badass workshop. But no, I'm talking about the business planning that you, me, Nikki, and Mark just did. Phase 1 of 3. But yeah, man, I'm all jazzed. I'm all pumped up still from that session.
Congratulations, Dustin. That's good when you have a clean and sober mind.
Yeah, well, I am a clean and sober mind because I am somewhere around day 10 of 75 hard. And it's amazing. You go 10 days with no alcohol. You go 10 days of every day reading a book that is a nonfiction business, self-help, how-to guide type book. Yes, drinking your water, eating clean, getting outside and exercising. Sure, that offers some mental clarity. No, I'm excited because 2025 represents the second full year of TLOP doing TLOP shit. And this is going to be the first year that we are so intentional. We have hyper focus. We have clarity.
Yeah.
And I'm looking at how it's already started. I'm like, damn.
And then in 2026, I'm just going to go ahead and announce it. We're going to do the official TLOP ayahuasca retreat.
We will 100%, you heard it here first, in 2026, we will have, I don't know about ayahuasca because I don't know what that is.
That's exactly what we're doing. And that's when shit really takes off.
Well, maybe not. I'm going to have to check with our legal and our compliance department on that one,
where
John.
we're going, there are no laws in the Amazon where we're going, sir.
Is that what it is?
Yes.
No, man, I'm pumped. Like, I'm looking at what we're doing with the TLOP MLO coaching community. Right. We're adding 40, 50 new members every single month. Right? We weren't there just a year ago. How many other people in their business look at where you are today and you're like, damn, I've come a long way. Hey, shout out to Will Gomez. So Will Gomez, an originator in Oklahoma. I met him originally at Sales Mastermind in like 2022, maybe it was. I was featured on Will's podcast earlier this year. Will reached out to me this morning.
Really?
Yeah, he sent me a really nice and cool gratitude text video message. Nice. But Will reminded me that it was this year, it was 2024, that I was at his office in Oklahoma. It seems like 2 years ago, right? You look at how far you've come and there's a lot to be proud of. And yeah, we have a lot to be proud of. So I am excited about that. I'm excited that UCF brought Scott Frost back home. And I say back home. I know he's a Nebraska kid, but Orlando is now home. This is where he and his wife want to raise their family.
Nebraska coach that nobody likes on TV.
Hush your mouth.
That's all I hear is how bad of a person and a coach he is. But you're happy.
John, have all 40 years of your life been you at your best?
Fuck no. I'm still
okay.
But
okay, well then let's give people an opportunity to live, learn, and grow. Yeah, but I can tell you this. You talk to the players that played for him back in 2017, 2018. Bro. Yeah, you look at the culture he built.
You should get Belichick.
No, I don't want Bill. I do not want that.
Why not?
No,
you should be the coach.
I don't want that.
I need you to be the coach.
You know what I'm going to do? I told my son this because my son's, like leaning into college athletics with the things he's doing as a college student. And I'm like, look, when I'm 55 and I'm retired, if I'm not advocating on Capitol Hill and lobbying on behalf of the mortgage and housing industry, which is something I want to do.
You'll be the DB coach.
I can't be a DB coach. I'm going to go be the freaking recruiting intern first. I need to be the recruiting intern. Then they'll make me like offensive analyst.
No.
Maybe after 5 years, I'll get to be like a DB
T-Lop
coach.
is going to make so much money. They're going to change it to T-Lop Stadium, and we're going to have our logos plastered everywhere. And
don't threaten me with a good time, John.
And then you're going to have a building named after you, the Owen Center.
Hey, do not threaten me with a bad time. And you're the one who said put it out in the universe and it may happen.
It is going to happen.
Yeah. Hey, what type of intel do you have on this new like super chip that Microsoft?
I don't.
No, Google made it. I'm
AI?
sorry. Google. It's like beyond that.
Whatever it's going to happen, it's going to accelerate. So we better start this podcast episode before it takes over.
We need to. I was scrolling through my news feed, and I tried to open the article and read it. I got lost like 3 sentences in.
Why?
Because I don't understand it. Like, I don't understand the fact that what a computer chip does, and it can compute some math equation.
Yeah, like you.
And if it would have taken, hey, like me, I wish. Like, it would have taken a normal computer, let's say 15 gabillion years to compute. This super chip made by Google can do it in a millisecond.
Cool. Let's make sure we put that chip in every employee at Chipotle so they can't fuck up my order when I'm standing in line. How about we do that?
That may happen.
I can't wait until I call an Uber and there's no driver, because that way I don't have to fucking answer their questions or talk back to them.
When I was in Scottsdale,
yep, they have Uberless carless drivers.
They do have carless
drivers. And they
drivers.
drive the speed limit, and they have too many rules. So,
have you been in one of them?
Shit, I'm not about to get arrested with the shit I'm gonna pull out in that back seat. They'll lock me in the car till the cops come. I ain't doing that shit.
Oh, very good. All right, so let's go ahead and jump into today's episode.
Okay.
So dual licensing.
Yes.
So it's funny. We did an episode about a month ago on the hybrid originator.
Right.
And I think there's many people who clicked on the hybrid originator and they thought I was talking, or we were talking, dual licensing. No, a hybrid originator, just to recap, and you should go check out that episode because I thought it was a really good episode and it performed really well. But a hybrid originator is like taking a traditional mortgage lender who procures their leads from their community, realtors, builders, circle of influence, past client, financial advisors. And we teach them how to leverage technology, websites, online marketing, advertising, social selling, to get more from those people by doing some practical, proven marketing and advertising strategies that use the internet and websites and Facebook. Okay. Or it's taking the consumer direct originator who they just do the loans for the people who are calling because they saw an ad. And we teach them how to take those loans and build real relationships with the borrower, with the listing agent, and the buyer's agent. So it's literally the hybrid is taking the best of both worlds and creating the future mortgage loan originator. That's where I think we're going in 2030. That's where me, Dan Snyder, Amir Syed, and now the new president of Lower, this dude Adam that we just hired, that's where we are so hyper-focused and aligned as a mortgage company that we want to do this for Lower, but we want to do it for the industry. And I want to do it for the industry because I'm going to take all the successes I have at Lower, I'm going to talk about it. And I'm going to travel the country and I'm going to teach it because it's one of those things that's it's not so secretive that I'm going to give you away the secret sauce. The success is in the implementation, right?
Correct.
So we're going to talk today about dual licensing, which is different than the hybrid originator. Dual licensing is a real estate agent who wants to be a mortgage lender. It's a mortgage lender who also wants to be a real estate agent. Like, that is dual licensing. And if you would have asked me, what are my thoughts on dual licensing 60 months ago, I would have given you one answer. If you asked me 9 months ago, I would have given you a slightly different answer. And when you ask me today, my answer differs from just 9 months ago. So when I share this information, please know we're recording this at the end of 2024, beginning of 2025. And these are the thoughts, according to Dustin Owen, based on where I am in my life, my career, and where our market and our industry is. All of this is subject to change. But if I go back to 60 months ago, 5 years ago, right, 2019, and someone said they wanted to do both real estate and mortgage, I would call them a hack. Period, plain and simple. I know there's outliers out there. We talk about it all the time. We reference Malcolm Gladwell in his awesome book named Outliers. But for the most part, my belief, and it still is at my core, be great at one thing. Don't be average or subpar at multiple things. Now, I say that in the back of my mind, I'm thinking, but also do you, homie. Like, at the end of the day, do you. It's your life to live. It's not my life to live. It's not John's life to live. It's not your mom or dad's or your business coach. It's not their life to live. It's your life to live. But if you are hiring me to be your consultant, your advisor, or your coach, I would walk you through the math And I would say to you, whether you're a loan officer trying to sell real estate or you're a realtor trying to do loans, I'm like, why do you want to divide your attention? Why do you want to divide your bandwidth to go lean into something where you have no experience, where you don't have much of a network, and take away from the one thing that you do have going for you?
Well, that's a foolish question, Dustin, because I want to make twice the money.
Well, that's what people think, they're going to make twice the money. But there's only so many hours in the day. There's only so many conversations you can have. There's only so much vision, strategy you can come up with, and there's only so much you can execute on. Right? I mean, we need sufficient amount of downtime. We can't always be on. So if you're already closing 20 transactions as a real estate agent, that means you're probably funding $8 million in volume. Like, follow me and follow this math. And you're probably netting 2% commission on that $8 million in volume. You're making $160,000 a year, like true taxable income. After expenses, after splits, you're making $160,000 in income. You're looking at those 20 transactions and you're like, oh, there were buyers involved in that. Okay. And if you're a realtor and you're tuning in, please, this is the conversation I would have with you. You're going to tell me, yeah, but there's buyers. I'm like, how many buyers? You did 20 transactions, you made $160,000. Like, high five. That's freaking awesome. Of those 20 transactions, how many were buyers? Oh, I don't do that many listings, they may tell me. Okay, cool. So you did 6 listings, you did 14 buyers. Awesome. Of those 14 buyers, how many used your preferred lender? Every good realtor, John, has a preferred lender. And they probably have 2 or 3 preferred lenders. And as a lender myself, I'm cool with that. What I'm not cool with is when that realtor refers all 3 of us at the same time. Like, I think that's a bullshit move. As a lender, if I had one of my friends, one of my circle of influence people reach out to me and they were looking for a great realtor, does that mean I should give them 3 realtors? What do you think?
No.
Probably not. I'd probably get to know them, get to know what they're looking to do, and I'd personality match. I know 100 realtors, but I'm going to refer 1. And it always baffles me when the real estate community is like, oh, I need to refer 3. I'm like, no, you don't. You can refer me and my team because we do a great job. And then you can tell them that if they're looking for other options, they can go online, they can go to their bank, they can go to their credit union, and they can interview whoever they want. But this is the person you know to do a great job. So if I am a realtor selling 20 homes a year, and let's just say 6 of them were listings, so there's no real buyer attached to that. 14 were buyers. Of those 14 that are buyers, I'm asking the agent who's thinking about dual licensing, how many of those 14 used your preferred? And I'm going to tell you the answer. I bet it's somewhere between 3 and 6. Somewhere between 3 and 6. So then that's going to let me say to them, so that means based on your current marketing activity, you have 3 to 6 transactions that you could originate as a lender. Because all the people who want to do dual licensing are trying to do is they're trying to get more meat off that bone. At the end of the day, they want to make more money with the same number of clients they currently have.
Well, isn't it their thought process? Because I'm completely ignorant to the situation, which makes me a great interviewee for this topic. Aren't they thinking they can keep everything in-house? Like, so they won't have to refer a lender and or realtor because like, I'll do the realtor and I'll do your financing. Just come with me and I'll just take care of everything for you right now.
Yeah, they're going to do it all.
Yeah.
Yeah. Just like when I go to the dentist, I walk in and my dentist greets me at the door. He has me check in, sign my name, answer the questions, and I take my pre-meds. Like, he does that for me, right?
No.
Okay. Then when I go, he grabs me and walks me back to the chair.
No.
No. Okay. Then he goes and does what? He takes my x-rays?
No.
He cleans my teeth?
No. The motherfucker comes in at the end and says, periodontal bite, lift up your tongue, roll good, sounds good, Mr. Coleman. See you in 6 months.
Yes.
Yeah, that's what he does.
Yeah, because he's a really good dentist.
Yeah.
Now, something went wrong. Cracked a tooth, got punched in the mouth, needed a root canal. Who do I want?
The dentist.
I want the dentist. I don't want the receptionist. I don't want the dental hygienist.
Right.
Yeah, possibly the dental assistant if they're really experienced, but I need the dentist. Okay, you could say, oh, I'm going to be the best realtor.
Yep.
And I'm going to be the best lender?
Damn right.
It's interesting. How many people do you know that are the best lawyer and the best doctor? Like, how many? Oh, I'm the best plumber and I'm the best electrician.
I'm the best husband and the best side piece.
Maybe you are. Maybe you are, but like
Right.
even with my branch managers that I coach, I will tell them the biggest struggle a producing branch manager has is I don't think it's normal or easy to be great at production, managing, and leading. I think you can be great at 2, and you have to find a who for the 3rd. Okay, so if you're a producing branch manager and I'm coaching you, right now I would tell you, you cannot, based on my experience, be great at production, leadership, and management. If you want to lead and produce, awesome. Go hire a manager. If you want to manage and lead, awesome. Find someone to take over your book of business and run your production team for you. I don't think, because I haven't seen that pattern in business, you can be a great realtor and a great loan officer.
What would you say coming from said industry if one would experience more success? Like if I started out as a loan originator and then decided to become a realtor, would I experience more success? Or if I started as a realtor and then became a loan officer, you know what I'm saying? Like coming from which avenue would you know what I'm saying? Like, hey, I started as a realtor.
Yes, I will tell you from interviewing guests that we've had on this show before who have done both. Having a branch manager who, when I met him, he was a buyer's agent and now he runs a branch for me. I will tell you, I think if you have had success as a loan officer, it is a lot easier to transition to becoming a successful realtor. But I've had plenty that started in real estate, and they now have very successful loan officer careers. The people that I'm thinking about, the Patrick Cheyennes, the Danny Gilberts of the world, they don't also sell real estate. Now, Patrick, full disclosure, helped his wife launch her real estate career, and she's a badass realtor in Central Florida. She actually listed and sold my parents' condo, right? She's really good. And I'm sure Patrick had a say in helping her get that off the ground because of his experience. But Patrick doesn't fuck with real estate. He has to be a great lender himself and be a great branch manager to his loan officers. So back on my original example, and I'll find a way to like keep the conversation flowing, but I want to walk people through the math. That same realtor who, again, it was 20 transactions, 6 of them were listings, 14 were buyers. I asked them, how many did you refer to your preferred lender? They said numbers between 3 and 6. So I said, cool, then that is your sample. That's what you're chasing. You want to get your mortgage license to do those 3 or 6 transactions. Then I love this. They will tell me, oh no, I'll do more. What makes you think you'll do more? Like, how come you didn't refer more to your lenders? Did you not try hard enough? Did you not think they were the best at their job? Did you not care about that partnership?
Yes, to all 3. But since it's me talking about me, I'm going to fluff myself up to make myself look like the genius I am.
Cool. So then I'm going to tell them, then let's just say you're going to refer you better than you refer to your partners.
Yes, exactly. Yeah.
Although you have no experience in this industry.
Oh.
You don't know what you're doing. You're still learning.
Right.
You're going to refer you harder than you referred your partners. Cool. All right. So of the 14, I know statistically 3 of them are paying cash right now. So 3 are cash buyers. That gives you 11 opportunities. Of those 11 opportunities, how many people come to you, Mr. or Mrs. Realtor, with a lender already in mind? Whether it's someone they found online who is cheapycheap.com, or whether it's the lender that's done 3 other loans for them, their sister's cousin's best friend, right? Or their bank or credit union. So now all of a sudden, you have to be a great realtor to them and you're competing for their mortgage business. It's not as easy as it sounds. Like, don't get me wrong. I get it. I'm the guy who looked at my mortgage operation and literally said, why in the hell did we not launch a homeowners insurance agency? I'd be a multimillionaire if I would have done that 15 years ago. And I tried to launch an insurance agency. And guess what, John? After 7 months, we shut it down. After 7 months, we shut it down. Now, some of that could have been timing.
All right.
Okay. Some of that could have been, the partnership I was in was on, its last leg. So we didn't put much energy to it. Some of it could have been, we just didn't hire the right agent. And instead of trying to keep it going and hiring a better agent, we just kind of let it fold. But what I can tell you is in life and in business, it's always going to cost twice as much as you think it will. And it'll always take 2 to 3 times as long as you think it will. Period. End of story. Whatever project you're working on, home improvement, launching a business, scaling a business, heck, even getting into a routine of being healthy
Right.
could cost you more money than you thought it would and take more time than you thought it would. So when we're looking at dual agency, I just start with why. Like, I want to know why. And I think the people should sit down and really reflect on why.
Well, when you've asked it, what are they must have given you an answer.
No, at the end of the day, people want more money.
It's just money.
It is. I want to make more money and work less. It's the American dream. I want to make more money, John, and work less. Damn it. Like, I'm going to start banging on the damn table. Like, I want to make more money and work less.
Right.
I don't know how plausible or possible that is. Now, if you read the book 10X is easier than 2X, you can learn to scale. It takes a lot of balls. It takes a lot of faith and a lot of determination, but you can make more money working less and only doing the things that you want to do. Mm-hmm. I think so few actually do it because so few have the balls and are willing to bet on themselves and have the tenacity and the endurance to see it through. But most people, it's the I want to take a pill and lose 100 pounds. It's the I want to work as minimum as I can to make the most amount of money as I can. So that's what they're looking for. And I'm telling them based on experience, I've yet to see it. I'm going to tell you the Don Harkins story in a second, but I'm going to wrap up this one scenario. And this is me. Remember, 60 months ago, I was hardcore.
Gung-ho.
I'm going to finish today's episode talking about how you can. Okay, there is a way to yes. And I'm a big find a way to yes person. If you come and work for me, you're going to learn. I am a find a way to yes. If I coach you, you're going to learn. It's find a way to yes. There is no. It's a find a way to yes. Now, you might not like the journey to get to yes, but we're going to come up with a plan, and then we're going to put together the actionable, measurable items that if you do X, Y, and Z, you will get to yes. All right? So I'm going to talk about at the end of this episode the yes. But I'm going to wrap up to where I was 60 months ago. Then we'll jump into find a way to yes. To that same realtor who is selling 20 homes a year, making 160 grand a year, and they're trying to capture, I don't know, let's call it 6 loans. That's what they're going to end up capturing, by the way. Because we said there's 14 buyers, 3 pay cash, that leaves 11. If you captured 60%, which I think is a very high percentage, okay, you got 6. Now, by the way, were you the best lender? Would you have referred you? But nonetheless, you got 6. At an average loan size of $335,000, you're looking at roughly $2 million in volume. You're going to make probably 100 basis points net. Because look, you're a dual agent here. You're dual agency, right? You're doing both. Dual licensing. If you're going to be great at real estate, I don't know if you can be also great at mortgage, at which point you're going to need to have some kind of a team in place that's actually doing the loan for you. A loan officer assistant, an inside LO, a loan partner, a processor. There's going to be a team that's actually doing the bulk of the heavy lifting. So even if your comp plan was 225, you don't see the full 225. Even if your branch was making 185 basis points on that loan, you're not seeing the 185. You're seeing about 100 to 125. So on $2 million, let's just say you W-2'd. Wait, well, I say $2 million. Oh, because I said you're going to do 6 transactions a year. That's going to amount to $2 million. 25 grand. Cool. You made 25 additional $1,000
for all that work.
Yeah, or you could have just sold 4 more homes.
Right.
You literally could have just sold 4 more homes. What is 4 homes? You're already doing 20. So increase what you know well, where you have traction, just by 20%.
Are the individuals that want to do this dual licensing thing, are they usually like subpar originators and or realtors? So they want to spread the shittiness among, you know what I'm saying?
Look, I know many mortgage millionaires, they don't fuck with selling real estate, right? I can point you to some teams in the real estate world that their gross commission is 2-3 million a year. They don't fuck with doing loans. Now, that said, that doesn't mean they don't have a lending relationship. It doesn't mean that they don't have 3 preferred lenders, and those preferred lenders have great relationships. They're true partners, and those lenders are paying some kind of marketing dollars into the brokerage as a way to legally, and I'm going to call it like I see it. It's legal pay for play. It's how do we stay RESPA compliant, and we figure out ways to do that as an industry. And then those brokers are able to offset some of their cost with their marketing arrangements with their 3 preferred lenders that are true partners. Like, yes, there are plenty of brokerages out there that see the amount of volume that they're doing, and they're like, let's just start our own mortgage company. Those are called joint ventures. Like, this is not brand new. But what I'm getting at is this dual licensing thing. Is it really right for me? If I'm a mortgage lender, why do I want to go sell real estate, John? And do loans? I'm going to tell you why. It's because I don't care to put in the work to be the best damn originator in my branch, to be the best damn originator in my zip code, the best damn originator in my MSA, the best damn originator in my state or in my company. So I'm looking for the easy way. It's all about finding the easy way. So there's going to be folks that we get some hate mail on. They're going to be on YouTube and they're going to be throwing in hate comments. Look, I accept it. This is the world according to Dustin Owen. You're going to be able to show me one or two outliers, and I'm cool with that. You're going to be saying, I hear you, Dio, but this works for me, and I'm going to give you a freaking high five and say, do you, homie? Like, do you? But do I think this is the future? Nah. No, I don't. Even with the NAR commission settlement lawsuit behind us, I don't see this. Even with technology, I don't see this, at least not yet.
Why? Has there been like somewhat of a recent resurgence in this notion of dual?
Yes.
There has been like a recently kind of piece.
Yes, but you know why, John?
No.
It's because we have the least amount of transactions being transacted right now than we have in 40 freaking years. So what happens when things get slow? Desperate times equal
desperate measures.
Desperate measures. All people are trying to do is survive, and they're searching for that piece of cheese. Who moved my cheese? Where'd it go? Right? It's like, y'all, I'm going to tell you the answer lies in what you don't want to do. What you need to do is just prospect more in what you're already doing. Expand your network. We had Patty Newby on, and Patty Newby told a story about living through the financial crisis. And what did she do? She didn't jump into real estate. She didn't also start selling life insurance. You know what she did? She expanded the geographic region that she called on and supported, because she knew she was great at mortgage. This is a lady who's going to make $1 million this year. This is a lady who's going to fund over $100 million in volume, right? And she was a guest on the show just a couple months back, and we can learn from Patty, which is, look, when things get tough, expand your audience. Alex Hermosi just taught that to me and Nikki through a podcast that we listened to. I wish Alex Hermosi taught it to me directly, but we don't know each other like that yet. Maybe I'll send him one Jordan, and in return, maybe he'll accept my invite.
Right.
Okay? But like, most of us just need to expand our network, and we need to go all in on being the best. Now, if we fast forward into 2030 and we look at technology, I mean, dude, we had John Mata Whitlock, and he's talking about freaking
like with the glasses, with the AI walking you through, they're doing the
yeah,
home
but
tours.
what's that called? Holograms?
Yeah.
Like, okay, AI, holograms. We kind of kicked off today's episode shooting the shit about Google having some super chip. Y'all, who knows what the next 5 years are really going to mean, right? Who knows what 2030 can be? And I'm open to all suggestions. But when I'm looking at 25, 26, and then 27, I don't see this as being like the best play. I don't. Now, I talked to a guy. Shout out to Rocky. Rocky, EXP Realty, down in Delray Beach. Rocky's a very successful real estate agent. He and his wife, great people too. Also, I can't wait to get invited on their like next snowboarding trip. FYI, Rocky, I'm putting it out there. Rocky, after 13 years of successfully having a real estate business that he and his wife have, they're top producers. They make a lot of money. He's like, he wants to get in a mortgage. So like anyone who wants to get in a mortgage, what's their first step? Listen to T-Lop, John. You look at me all like stone cold.
Just stoned.
Just stoned. Not cold. You're hot as fuck. But
it is warm in here
today.
today.
It is warm in here
the
today.
Fuck, man?
I don't know. They keep on playing with the temperature.
Right.
But yeah, so Rocky, so he's binging T-Lop. He went back to episode 1. I'm like, I'm sorry. I'm so sorry.
Nah, man.
I'm like, you could have picked us up on like episode 41. So like, he's like, no, right now I'm all into COVID. Cause that's when we were talking a lot about COVID back then. That was like, yeah, Q2 of 2020.
Yeah.
Right. Is kind of when John and I started hardcore podcasting. So anyhow, he's talking to me about dual licensing. And I got to admit, if someone has it right, Rocky has it right. Rocky has it right. So if we want to learn, let's learn from Rocky. Rocky's already successful in real estate. Now, by the way, his degree is in finance. By the way, he's already built a really successful real estate agency. He has transaction coordinators. He has showing agents. He has virtual assistants, and it's a husband and wife team. So he has his wife. They're pretty dialed in. He has this vast network of referral sources. Most of his business is by referral only. He works his network. Rocky's story is so amazing. He actually started when he was a bartender and his wife was a cart girl, and they both at a very nice South Florida
country club.
A cart girl, someone who drives the golf course, selling drinks to old, creepy dudes who are playing golf.
Drunk.
But what they did is when they knew they were going to go all in on real estate, they started talking to every person that Rocky was serving. And he was at like big fundraisers. Mm-hmm. She started making friends with all of the golfers. Mm-hmm. They started asking them up front, hey, when I become a real estate agent, can I reach out to you? Can I be your go-to resource for real estate? They all agreed. They all liked Rocky. They liked his wife. And then voila, look at where they are today, making bank, selling real estate. So Rocky wants to be a dual licensed. He wants to sell real estate and do mortgages. And at first, I was giving Rocky, just beating him up. Mm-hmm. We talked for an hour and 45 minutes. He reached out to me on Instagram. So reached out to me via Instagram. We went back and forth a couple times. And then eventually I'm like, dude, I'm just going to call this guy. So I called him this morning driving in and we got into it. And I went all in like, dude, everything that I walked you all through as I put Rocky through that. And then we finally get to where he is in his career. It's like, Dio, listen, this is what I'm doing. I generate this many leads. I take this many listings. I don't show property. I have a showing agent. I don't go in the MLS. I have a transaction coordinator. All I do is generate the lead, give the home buyer a home selling consultation. I take the listing. I negotiate the agreement. I negotiate the offers. And I have a team that I've built that has allowed me to scale. I'm like, oh shit, you must have just read 10X is easier than 2X. He's like, no, he just masterminds a lot. Never been formally coached, but he masterminds. Doesn't go to conference, but he masterminds. So he's learning from other agents and implementing what's working for them. He's also doing what makes common sense. And common sense, if you want to scale, is not doing it all yourself. You can't be the technician and the lead generator and the coordinator and the executive assistant. Can't do it. So what he tells me is what made me shift my stance. Once I figured out how dialed in he was, he then talked to me about how he properly sets expectations with his real estate clients. And he sets proper expectations like, look, here's why I'm not going to meet you at that property to show you and why you need one of my showing agents to show up. He said, my showing agents, that's all they do. That's all they love to do. And they're really good at it. If I show up, I'm going to want to sell you that house because my job is to sell. My job is to close. He's like, I don't want me showing you property and you don't want me showing you property because I'm going to be talking to you all about how we can negotiate you purchasing this. Mm-hmm. All right, showing assistants, they're just there to show you the property, give you the tour, answer your questions. They're not incentivized on whether or not you buy that property. So for Rocky to give the best service to his real estate clients, he needs some who's, not some hows. Mm-hmm. And his who's are that. He said, Dio, when I do mortgages, please know I'm going to do the financial consultation. And then I'm going to let them know that you're going to talk to Linda, my assistant, and she's going to take down all your information. You don't want me taking down your information because Linda's way better at me. She's friendlier. She's more detailed. She dots those I's and crosses those T's. After that, Linda is going to transfer your file to Roberto. Roberto is the technician. This is the dude that knows loan programs, products, and guidelines inside and out. Mm-hmm. Roberto then is going to work on your pre-approval. Now, within the process, I'm going to check in with Linda. I'm going to check in with Roberto. And they're going to update me on how things are going. And I'm going to give you a call. And I'm going to give you my input on how things are looking. But ultimately, we're going to rely on Linda and Roberto to get your loan from start to finish. At which point, my processor, Brittany, will make sure that she's responsible. Once Roberto has locked your loan in, taken your loan application, that Brittany's responsible to get it to the underwriter to make sure it gets not just underwritten, approved, but eventually fully approved, funded so that you can become a homeowner. And for that, Rocky thinks, because he does enough volume and can generate enough leads, he thinks that he could generate 100 basis points for himself doing that. Now, he's going to need to generate enough revenue to support Linda, to support Roberto and to support Brittany. Now, Brittany's easy to support because she's a mortgage processor. Normally, we charge a processing fee on our closing disclosure, at which point that fee would just go straight to Brittany. But Roberto and Linda only get paid if and when Rocky is successful in turning a lead into a loan. Mm-hmm. And that's what Rocky's going to have to figure out. He just passed his NMLS exam. He's currently interviewing mortgage lenders in South Florida, and he's talking to a couple pretty decent ones. But I'm not convinced that Rocky's going to be able to generate enough leads. Because I said to Rocky, if you're generating that many leads, why not just generate real estate leads? You make way more money on a real estate lead than you do on a mortgage lead. Like, think about this. Realtors get paid on sales price. Realtors get paid whether there's financing involved or they pay cash. Lenders only get paid if there's financing involved, and we get paid on the loan amount. So I'm like, Rocky, you're going to spend this time generating these extra leads to then give to your team so your team can, I'm like, what are you trying to gain out of this? Is it 80 grand? Is it 120 grand? And I gave him the same feedback I would have given him 60 months ago. I gave him 6 hours ago, which is, you may find that it's the highest and best use of your time, if you're looking to pick up 80 to 120 grand, to just go sell an extra 5 homes or an extra 6 homes, one every 2 months. That may be what's best for Rocky, but he has this itch and he wants to scratch it. And I wanted to talk about it today because dual licensing is a hot topic, and the topic is not going to go away. The regulators, right, HUD, Fannie and Freddie, have actually made it easier. There used to be a time, John, that you couldn't be the realtor of record and the lender of record on an FHA loan. Mm-hmm. And then either this year or last year, HUD lifted that. And now you can technically represent your home buyer on both the real estate side and the lending side. But you have to ask yourself, is that what is best for your client? Is that what you would want for you? Or do you want the best damn realtor and the best damn lender? Because there's a whole nother, like, what do they call that? Like fiduciary responsibility. And then you have to ask yourself, are you the best lender for that particular person? And maybe you're like, dude, I'm not the best lender, but my team is. Awesome. I'm not the best lender, but my branch is phenomenal and everything I do runs through my branch resources. Okay, cool. You can check that box. But I'm still going to ask you, whether you're a loan officer wanting to become a realtor or a realtor wanting to become a loan officer, and you want to do both. I'm going to ask you, is this just an excuse to not have to change, to not have to do anything that's difficult, uncomfortable, because you're hoping you can make more money by doing less? And at which point I'd remind you, hope is not a strategy. And that I think for 80% of us, if we're looking to make more money, it's all about getting better at what we're currently doing and not trying to take on different roles within the transaction. That's my 2 cents as of Q4 of 24 and Q1 of 25. This may very well change as we get into 27, 29, 31. Damn. And technology advancements and consumer behavior evolve.
Well said, Dustin.
Yeah.
Well, I have something to close
What
up.
do you have?
You have 16 seconds, but you brought up Don Harkins as a name. Is there something you want to circle back to on that?
No, man. Shout out to my boy Don Harkins. Here's my Don Harkins story. Don was still is, a realtor with a team, successful team. Don made the decision that his team on real estate was self-managed. Like, he had listing agents, buyers agents, transaction coordinators. That shit ran itself. It didn't need Don. Don wanted to go full-time into mortgage loan origination. So I hired him, put him through the same exact rookie assimilation program that I've put 36 lenders through over the past 10 plus years. Some of them are the best LOs in the country. And within 6 months, here's what Don said to me. I wish I found mortgage before I found real estate because I love it. He said, but I have a very successful real estate career. Although I felt like my real estate business was self-managed, they still need me and they need more of me than I actually thought they needed. Holy shit, I didn't know so much effort and time went into a mortgage pre-approval. He said, Dustin, I've been selling real estate for 10 years. I literally thought a pre-approval was something that could be done in 15 minutes. He's like, I literally thought you had a conversation, you pulled credit, you sent the letter. I'm like, no, Don, that's called a pre-qual. And you would never want to take a pre-qual on any one of your listings, just like you would never want to go drive around Central Florida for 6 hours showing property to someone who's just pre-qualled. Pre-approval actually means you put in work, you collected documents. It means that you have data integrity, because it's shit in, shit out in the mortgage industry. If you put shit into the system, then the system's going to produce shit as a result. And after 9 months, he was done trying to be a full-time mortgage loan originator. Not that he didn't love the industry, not that he couldn't have been great at it. Now, I do think Don kept his license. I do think Don hangs his license. And I do think when Don gets an opportunity, sure, he'll refer a buyer over to his buddy who has his own brokerage. And I'm sure that, again, I'm not the compliance police, I'm not regulation. I'm sure that currently there's a way that that brokerage just gives Don some kind of a commission split. Hopefully he performed some work on the loan. If I was coaching you, Don, I'd say make sure you're performing some work on the loan. This is not just a refer and get paid situation. I'm not compliance, but I don't think that is following the letter of the law, as they like to say. But yeah, he's super competent, very successful, professional, high aptitude, above average intelligence, all the things we look for. But it's just like, yeah, he couldn't do both. And he was trying to do both full time. No. So yeah, he has his license. He may or may not have 4 to 6 loans a year that fund because he referred it over. He gets some kind of a commission split. If I look at the time Don dedicated to all of that for the little bit of money that he's making, was it the highest and best use of his time? I can't answer that, but only Don can.
Well said, Dustin.
Yeah, so there's the Don Harkin story. And shout out to Don. Shout out to Rocky. Shout out to everybody that,
made it this far into the episode, Dustin.
That made it this far into the episode. Hey, look, we're getting towards the end of the year. I want you all to have an awesome holiday season. I hope for your good and your business that you take a minimum of 5 days off to yourself. Just 5 days to decompress, to relax, and honestly, allow your brain to take a break, but then allow your creativity to get sparked. Allow your vision for 25 to become clearer so that whatever it is that you choose to do, you can go all in and focus on being the best at just that. I'm excited for everything 25 is going to bring to John and I, this podcast, the business coaching and sales training community that we built over at tloponline.com, all of the speaking engagements, the sponsorship and advertising opportunities we're going to be making available to companies that want to participate in the content that we create. The second YouTube channel we're going to be launching, right? I'm looking at 2024 or 2025. I was telling my wife, John, check this out. So I'm going to be in New Orleans, Louisiana, January 13th, doing a private event for our friends over at Eustace Mortgage. Mm-hmm. I'm then going to be back in Orlando, down at Mid-Florida Credit Union, doing a private coaching speaking event for them. Mortgage Con down at Universal Studios in Orlando, 3-day mortgage conference, going to be badass. I'm one of the keynote speakers there in February. Mm-hmm. I'm doing MBA of Kentucky.
Shout out.
In, I think that's going to be in March. And then in April, I'm doing MBA of Iowa. We're talking to the people. I probably can't say, it's going to be a surprise. Okay. Well, there's an event going on up in the, what do you call that? Like the New England area. That's going to be happening between March and April. We're looking at being a part of that. Like there's going to be so many opportunities for us to be able to get out, connect with our audience, but also grow the audience. Mm-hmm. If you're interested in hiring me or John and I, preferably,
just you, bro,
to come to your event, whether it's a private event, whether it's an event for the mortgage industry, reach out to me directly on LinkedIn. My first name is Dustin. My last name is Owen. More than likely, I'm going to get you connected to Nikki Ray on our team. She's Nikki, Nikki, at tloponline.com. And I have committed mentally to doing 12 live events, 12 speaking engagements outside of the state of Florida, plus the ones that I do in Florida, because Florida is easy for me. I can typically do a day trip there and back. If you are at a point in your career where you've recognized you need mentorship, you need a coach, you need to be trained, you need to be a part of a community where everybody's getting after it and everybody's working on becoming better versions of themselves, both as individuals and business operators. Check out what we're doing through the TLOP MLO coaching community. The website is tloponline.com. We have annual memberships. We have monthly memberships. And we're currently taking applications for a course that I created and I personally teach called LO Launch. If you're wanting to go through a 16-week intensive course that is guaranteed to launch your career to the next level, you should inquire with my team on TLOP Online about how you can be included in the next LO Launch class. He's John Coleman. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. If you like what we're doing, please share us. Sharing is caring. Do it not once, not twice, but 3 times. If you're tuned in on audio only, that's Spotify or Apple Podcasts, please know we have an entire YouTube channel. We'd love for you to go to the Loan Officer Podcast YouTube channel and subscribe. And if you're into newsletters that provide you with free additional content, we're talking market updates and sales tips and did you knows, please go to our website and you can subscribe to my newsletter that I write personally and send it out every single Thursday. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.